Hello investors and traders, today we'll speak about few stocks to buy in February 2023. So let's start with the first stock to buy. It's Zoom Communication. It's IT company, Nasdaq services. Of course it's Zoom. I'm by myself provide a lot of videos by Zoom in my job, so very cool and useful soft. So let's start with the technical analysis. Here in my mind, of course we are in a correction. Now we are down from its high levels. The stock is down more than 80%. So in my mind here there is a decreasing channel, and it was the first wave, the second, the third, the fourth, and the fifth. If we will look closely, most probably here it's a triangle, and it will be the finish of the fifth wave. So it was the first, the second, the third, the fourth, and the fifth. So I'm expecting another move down, maybe somewhere there. But anyway, the finishing of the correction is very close. So I think these levels, it can be very nice and very convenient for buying. Let's have a look. By the way, there is the momentum indicator. It's also telling us that now it can be a nice moment to buy, because look here, the RSI, the weekly RSI is 39, so the stock already oversold. That's why, of course, I think it can be a nice levels, but of course, let's have a look on the fundamental parameters of Zoom. So Zoom financial position and financial stability, with no doubt, is very strong, very stable. Debt to EBITDA ratio is 0.1. The ultimate score is higher than 7, and the cash to debt ratio, please pay attention that the company has 50 times more cash than debt. So any problems with that, the marginality also is okay. Gross 75 and net margin is 16. For its IT company, it's of course not so high, but anyway, the marginality is quite enough. And the expectations for growth, please have a look on the future total revenue growth. Future 3-5 years is expected to grow about 10%. It's of course it's a lot. And the evaluation now 30, P ratio 30, but the forward P ratio is only 18. So 18, it's in my mind it's cheap, and the PS ratio now is about 4 for such marginality. By the way, it's okay for, but I think if the net income and the revenue will continue to grow, of course it will be lower. The PS ratio will decrease, and the current ratio and the quicker ratio, any problems with the liquidity for this company, both of them are higher than 1. And another interesting moment, please have a look on this one, that the company now has free cash flow about 1.5 billion, so it can be sent to dividends, maybe to buyback, but anyway it's very nice and very good for investors. Free cash flow, I remind you, this operational income, it's operation cash flow minus investing cash flow from investing. So the company has free money, free cash that it send at any purpose it will decide. So most probably we can expect a buyback from Zoom in the future, in the near future. And of course its revenue, most of its revenue is earned in US, part of in Europe and Asia Pacific. So generally speaking, like the valuation of Zoom, the expectation, it has free cash flow, and also the stock is now down more than 80% from its high levels. And the technical analysis tell us also that the correction here most probably is very close to it finishing. So Zoom is the first stock for today. Let's move to the second stock that I'm buying in February. It's Abbvie. So it's a healthcare stock, healthcare company. So here last 2 years we are trading in increasing channel, and now we are in the lower level of this channel. So Please pay attention here. On a daily chart, the RSI, the momentum indicator, is already 30. So it tells us that the stock now is oversold, so maybe it can be a nice time to buy it. For example, here, look, it was here on the lower levels and then in the lower borders, and then we saw a bounce in the stock performance. Here another time, another one, it just went lower than 30, and then of course the stock showed a nice performance. So another time I'm expecting to see this tendency and this history to repeat itself. By the way, it's a dividend stock. Dividend yield is more than 4%. For dividend investors, it can be very nice and very interesting point. And the marginality now, the net margin profit is 26%, quite impressive figure. The payout ratio is 75%. It tells us that 75% of its net income that the company earns, it's sent to dividends to its shareholders. So here another place when the company can increase its dividend payments. And by the way, the PS ratio, we can see that now the PS ratio is 4.5, so in the middle range. For last years it was 6, 5. Now I think it's not so expensive. And Abbvie is the second stock combined in February. I like its dividends, the technical analysis telling us that most probably it can be an opportunity to buy. And of course healthcare, usually it's one of the defensive sectors, so even if we're expecting recession in this year, every stock can perform very nice and very well. So it was my stocks that I'm buying in these months. If you like this video, press the like button, don't forget to subscribe to my channel, and see you and the next time. Bye.